So let's try and make sense of exactly what is happening in the chemical industry. How should one gauge these sort of volatile news flows coming in and day out? We have Ajay Joshi, who's the chemical industry expert, joining us right now. Thank you so much, Mr. Joshi, for joining us in ET Now. And some of the tariff announcements that we've had, if you could help us understand what would be the impact of this one on Indian companies, are you seeing any advantage coming in for CDRMO market in particular, given the fact that there's not much announcements made on that particular front?
I think the much awaited Trump 2.0 tariffs are back, and see, we as India, as a country, we export to US so much. US is our number one or number two destination in terms of chemical export for the past 3 to 5 years. So tariffs are definitely going to impact a lot of Indian chemical companies, but CRDMO companies like Jubilant Ingrevia, companies like Amy Organics, PI Industries, that will gain substantial export share in the US market because the tariffs on China are much higher than the tariffs on India. The China tariffs are 34% plus 20% additional previous tariffs versus 26% tariffs on India. So CRDMOs will definitely gain because the cost of manufacturing in the US is so expensive that companies are bound to outsource. Within CRDMOs, also companies like Jubilant Ingrevia, which have unique and monopolistic business of pyridine and niacinamide with no global competition. The only competition to Jubilant Ingrevia is from China. And now since China is out of the market because of such higher tariffs, they will gain substantial share in the US market.
All right, Ajay, also, we already know the sectors that will be getting impacted because of Trump tariffs. But talk to us about the sectors that are likely to be benefited from this, and which are the sectors that are going to be impacted on the negative side as far as the Indian companies are concerned?
So one is definitely CRDMOs that we talked about. Another sector is flavor and fragrance industry. They are companies like TV Specialty, because flavor and fragrance industry was long supplied by the European chemical companies, but there the cost of manufacturing is not that great. So even the European fragrance companies like IIF, Givaudan, Firmenich, they have started outsourcing a lot of manufacturing to Indian companies. So Indian companies operating in the flavor and fragrance segment would gain substantial sales share in the US market. Here again, we do not have local competition in the US as well as no competition from China. Another sector which might gain in the US market is agrochemicals. Agrochemical companies like UPL. In agrochemical, there was some tariff put in Trump 1.0 era in 2018, and now again additional tariffs are added. So agrochemical companies which have formulations going into the US market will gain substantial share. Third is ref gas players, because the proxy routes of ref gas suppliers from China, from Vietnam and Turkey have been cut off by the US government completely. So US customers are now bound to import from India. So ref gas companies would also gain some volume share in the US market.
Right. So let me help me understand. So how does the global chemical industry's actually outlook change, especially keeping the Europe and China in mind? Now, do you think because of this tariff, there will be a rejig? Which economy now would come on top?
See, right now, in terms of chemicals demand, India is one of the booming market. The domestic demand is so strong. We talk about segments like ref gas, the peak summer season is coming up. So domestic demand is strong. For agrochemicals also this year, the pest invasion is much higher till now in all the crops. So the agrochemical demand is also strong. In the global market, China domestic demand is improving in couple of segments like personal care, couple of segments like ref gas also. The old inventories of Chinese suppliers are over. So the ref gas pricing is also might improve in future further. Europe demand is gradually improving, but not to the pre-COVID and pre-Russia-Ukraine levels. But once Russia-Ukraine truce happens, the European chemical industry would also bounce back and we will have fresh demand there. The US market, agrochemical market is improving. The inventories are getting over. Apart from that, within the US, the fresh orders for contract manufacturing will be getting rolled out. So a couple of pockets are there all across in the global chemical sector where we can have good demand.
Right. Also, what kind of growth measures can India undertake, as it is expected that China will now start over-flooding the markets in various geographies this year?
Yes, one very good analysis is that although a couple of Indian chemical companies will gain export share in the US market, but in the rest of the world, China will pump and dump. So what we can do as a country, I think the government has already been putting a lot of anti-dumping duties and minimum import price support to safeguard the domestic market so that at least the domestic market is with domestic manufacturers. In the export market, definitely we are going to suffer, particularly in the Latin American market where China is so aggressive with their FTAs and favorable trade policies. Even in the Middle Eastern market, the Indian ref gas players will now have intense competition from China since US used to be around 9% of China manufacturers. They need to pump and dump their chemicals somewhere else. So in the rest of the world market, Indian exporters would definitely suffer. So what government can do, we can invite foreign companies from Middle East, we can invite foreign companies from Europe to invest in assets, invest in manufacturing units in India so that we can also leverage India as a global export hub like they have done with the Chinese.
Right, Ajay. Since now we are at the cusp of actually getting the queue for earnings for the Indian industry, if you could help us understand what sort of performance or what have you penciled in when you talk about specialty chemicals as well as agrochemical space? How do you think the quarter gone by has been for these companies? What should one expect or penciling in while actually trying to gauge the performance of the sector?
In this SpecChem, Naveen, SRF, Vinity and Atul, I'm expecting them to show good growth over last quarter. But agrochemicals, the domestic manufacturers like Dhanuka, Coromandel, they will show good numbers. But agrochemical players, again active in the export market, will show some weaker numbers. But definitely the ref gas players, because the pricing was better in the last quarter. So ref gas players will show very good numbers, including Naveen, SRF, GFL.
All right, Ajay, on that note, we will let you go. Thank you so much for joining us today.
If you like this video, then like, share and subscribe to ET Now.